the CBOE Volatility Index, or VIX as it's called for shorthand, spiked 44% in one day on Thursday of this week. And since late July, according to this article, it's up 80%. So what does this mean? What do you think this signal means? First, let's talk about the definition of what the VIX is for those of you who are not familiar. Its ticker symbol is VIX, and it's short for the Chicago Board of Options Exchange CBOE Volatility Index, which shows the market's expectation of the 30-day volatility. It is constructed using the implied volatilities of a wide range of S&P 500 index options. This volatility is meant to be forward-looking, is calculated from both calls and puts, and is widely used measure of market risk, often referred to as the investor fear gauge. So this is the Investopedia definition. I will also attach to the CBOE definition of the VIX. What we are seeing here, though, with the VIX charts is for a long time lately, the VIX is normally very calm. As you got, for some of you who are more experienced investors know, in the past, during the 2008 financial crisis, the VIX was going haywire, but really the last couple of years, the VIX has been quiet. And that's been because of central bank interventions in markets and massive expansion of, manipulation with central banks, with their plunge protection teams, the exchange stabilization funds, and just rapid expansion of central bank balance sheets. So investors are aware of this central bank intervention if you're a bond trader or a hedge fund guy, you're a professional money manager, and a lot of people have piggybacked this trade. So, the VIX, the spike, I have a chart of the VIX here. I'm going to attach links to all of these either charts or definitions I'm talking about for you guys to go back and look at these more in depth. But in general, for really the last 12 months, the VIX has not stayed high. There's been pretty rapid, quick spikes of the VIX, especially on Election Day when Donald Trump won, right here, right before Election Day, and then Election Day, and then it went right back down. Look, I'm following the chart here. It went right back down again. Then there was a big spike in May, and then it went right back down again. And then we had this enormous spike again this week. So I think, what we have is a lot of hedge fund managers that have done these short volatility trades. There's actually this hedge fund manager named Chris Cole of Artemis Capital. I reached out to him and his firm, and I'm trying to get him on for an interview. He has a $200 million volatility hedge fund, and he sets up volatility trades. He specializes in that. And his research, he's published a bunch of white papers the last few years, and he's interviewed, talked off the record. He's not a journalist, so he's talked off the record with professional money managers for institutions and hedge fund managers. And what he said, I'm trying to figure out how big this trade is, but what he's found is a lot of these money manager guys are heavily short volatility trades. So they're shorting the VIX, they're doing short straddles on a lot of stock market indices, and they're basically betting that the Federal Reserve and other central banks have their backs and won't allow asset prices to fall. And by selling, naked puts and short straddles, you're betting that there won't be volatility, rapid movements up or down in asset prices, that things will stay in a range. And if you're right about that, and you, according to Chris Cole, there's been a lot of these leverage trades. I'm trying to find out how big of a trade this is, how much leverage is being used. Is this like AIG prior to the 2008 financial crisis? I don't know the answer yet. So there's Chris Cole interviews. If you're a Real Vision TV subscriber, he did an excellent interview of over an hour a month ago talking about this, but no one asked him how big this trade is with the leverage. So if I get to interview him, I will ask him that. And then also Dimitri Kofinas, who has a new podcast, Hidden Forces, which does cover some investing and markets topics, but not all. He has science and technology in there as well. But he interviewed Chris Cole, I think, for one of his first few interview guests, I believe either late 2016 or early 2017. You can go back there in the archives. So basically you have certain, myopic, short-sighted, leveraged hedge fund money and other professional money managers who have leveraged up this short volatility naked put trade with short straddles and other things, shorting the VIX as well. And they've been collecting a lot of money, perhaps billions of dollars in premiums, betting that there won't be a lot of volatility. And at some point, if the trade goes bad, because a lot of people who are trend traders and short-sighted and trying to make huge profits trading with other people's money every month or every quarter, just to beat their whatever their benchmark is or keep assets under management so they can have high fees and high bonuses. At At some point, though, they're going to have to cover those trades, and it could be very, very ugly when they do. But there's also other people on the other side of the trades, like Jeffrey Gunlock, the bond guy, believe he is long the VIX, so he's made good money here lately on that trade because he realized that the VIX, was at record lows. It was at $8 back on the chart here. The VIX had dropped down, I think, to, it was back down to like $8, I think, at one point, and then it spiked very quickly up. So, in a normal, healthy market, guys, with whether they're stocks or other assets, there would be a normal amount of healthy volatility. But because of the markets we have now with high leverage and hedge funds and managed money piggybacking central bankers' trades, there's been record amounts of low volatility. So I wonder what... This could be very interesting. So the rise in the VIX is being attributed right now to, Donald Trump statements of North Korea back and forth lately with Donald Trump and also General Mattis and the State Department sending statements back and forth about North Korea, and then Kim Jong-un and North Korea people sending, and people in the North Korean government sending those statements back and forth. So that's the rise in VIX. But I wonder if there's something else here that's also spiking the VIX. But based on what Chris Cole has said, hopefully I can get him on to ask him these questions. This spike then would be knocked right back down because a lot of people are losing money on this VIX spike. So there's going to be a lot of people trying to continue to naked short this thing to collect premiums and knock it right back down, which is not a healthy market. It's obviously a very leveraged trade, and there's a lot of people doing it and piggybacking the massive amounts of QE that central banks have put into asset prices to keep them up to prevent volatility in stocks, bonds, real estate. So it'll be very interesting. What do you guys think about this spike in the VIX? Do you think it's all because of North Korea, or do you think this means that a lot of people are really selling their stocks and getting out the door and going to cash or other assets? So comment in the section. This is just a short little video. And if you want to do more research on this, I'm going to attach the links here to the definitions of what the volatility index actually is with the charts and some of the other articles lately about the VIX. Okay, bye. Wall Street for Main Street needs your help. YouTube stole $7,200 from Wall Street for Main Street in annualized YouTube AdWords revenues, and they kneecapped our analytics down by more than 80% across the board since September 2016 with their new censorship algorithms to stop the rapid growth of our channel. That was money we could have used to upgrade our website, pay bills, and invest in improving our content and growing our business. Our audience of loyal listeners is all over the globe and so large now that if most or all of our listeners were to commit to donating $1 to $5 each month to our Patreon account, we could easily meet our goal on Patreon. Wall Street for Main Street also accepts one-time donations on our main wallstreetformainstreet.com website. That's WALLSTFORMAINST.com website via PayPal, Gold Money, or Bitcoin. We also accept donations of physical precious metals that can be mailed to us. Thanks to all listeners who have already made a donation, and thanks in advance to any listeners who make a future donation or contribution to the growth, improvement, and success of Wall Street for Main Street.